prediction analysis compared to BS, complete BS and drama on predictions of price to get you to either buy a stock, sell a stock, dump the stock, to get to you to watch a video, watch a TV show. There's always some reason behind the exaggerated BS predictions. So what is the difference between BS, complete nonsense, and actual analysis and prediction? Let's look at that right now. I've got people in the chat telling me today that we have got Nvidia going to $4,000, and I've just done a full prediction and a full analysis on it. Sensei's done a full chart analysis. You might want to go and check that out. Links are below and above my head for that. I've also just done a fundamental video on it as well. I see it going to $200. You might want to go and check that out, and my philosophy to investing and all the rest of it. But let's discuss right now the difference between BS, all out crazy making up numbers, and analysis. It's very, very important. And people get very manipulated all the time with false information, and a little bit of knowledge is very, very dangerous. Let me give you an example. First of all, we'll look at a bankrupt company, effectively a bankrupt stock, Faraday Future, no value whatsoever. People will look at this and go, hang on a minute, this company can do this, and EVs are great and sexy and fantastic. And look, it used to be $4,000 a share. Hang on a minute, $4,000 a share. Look at that, Faraday Future. $4,000 a share. It was never $4,000 a share. It was simply the price now compared to where it is today because it had a reverse split. It was probably about $2, but now it's $4,000 because it's split and split so many flipping times. In the past, it's $4,000, and people will forget. Retail investors will come in and they will look at that and they will go, it used to be $4,000. Well, Nvidia can get to $4,000 then if FFIE can. And then people will make videos on it on YouTube. People will even make predictions on CNBC and Bloomberg because it's drama. They're called Bloomberg contributors. It doesn't mean to say they know what they're talking about, but they provide some very entertaining segments on Bloomberg, on CNBC. This happens all of the time, right? Now then, the difference between guessing and making up news and getting a bit of information and skewering it all out of context is this. Like I just demonstrated there, you can look at some information and get a bit of information and get completely confused, or you can look at actual analysis and real numbers that actually make sense. And I want to use Coca-Cola as an example. Coca-Cola, just one random stock I just chose out of the thin air, and no reason specifically. But here is the last few earnings: 1, 2, 3, 4, 5, 6, 7, 8. A couple of years' earnings, right? And you can see that the dark color was the prediction. That was Wall Street's analysis. They don't work for the company. They don't know what the numbers are, but they do know what the numbers are that are publicly available, but they don't know what the current numbers are. But they are running the numbers through very advanced computers and analysis and programs, very intelligent people making their predictions, their expectations of the earnings. Now, a business like Coca-Cola is great because it's a very solid, predictable business, really. So it doesn't have any surprises. And as we can see, when the earnings comes out, the actual, which is the bright orange, you can see how close it was to the actual estimated earnings. That shows you the difference between a prediction based upon numbers, balance sheets, and experience and actual facts, how close it is to the actual numbers. That is very much the case. However, from time to time, we can get a bit of a surprise. I've not done this yet. I'm doing this in real time. Let's have a quick look at Nvidia and scroll down here. Now, even with Nvidia, that worked out pretty conveniently for my argument here. Nvidia is an explosive stock. However, analysts and those that study balance sheets like I do and look at numbers are pretty accurate. Even Nvidia didn't really surprise very much. Yes, it beat on earnings, consistently beating, but it's not that much. It's not a massive surprise. It's not suddenly we're making millions of dollars above the, millions above the price target or God knows what else, or below. We're pretty accurate. That's the difference between real analysis, fundamentals, studying, the balance sheets, and complete all-out lunacy. Now, what we've got this morning, we've got people making predictions of we're going to see $4,000 for Nvidia. Now, I think a lot of that is because either they're looking at websites which are just talking rubbish to sell you ads, to sell you space, YouTubers to try to get you to watch, whatever it might be, because everybody wants to get rich in 3 seconds. Let's be honest, nobody wants to wait for 10 seconds. They want to get rich in 3 seconds. That stuff sells, just like doom and gloom sells in the newspapers. We're always going to have a world war, everyone's dying, and because everybody tunes in for that. The reality is none of that is true, and we've recently done a poll and found out 85% of my viewers don't even read the balance sheet. I haven't done it for a while. I'd like to find out. Actually, now it's probably better than that. But when we first started, I think it was about 2 years ago, 85% didn't read balance sheets. It'd be interesting to do it again now and see how that's changed over time. But people will make wild predictions, particularly with crypto. Bitcoin's going to go to 1 million, 2 million, 10 million. Let's call it 1 billion. Whatever, it's based upon nothing, right? So be very, very careful if you are reading websites, YouTubers telling you the world's going to come into the end, making wild predictions. The reality is a good, solid business can be predicted quite easily by reading the numbers. It's why Wall Street get it pretty much right. They're not completely spot on, but they're damn sight closer than the wild speculative guessing of YouTubers, Reddit rooms, and those that want to sell you something. So just bear that in mind. And the point of this video is that's how the stock market works. The stock market is a place for certainty. If you are an investor, not a gambler, not a speculative gambler, but an investor with large amounts of money, you want to know what is likely to happen to your money. Because if you've made millions and you don't need any more money, but you don't want to lose the money that you've already gained over your lifetime, you want to know where the market is likely to go. You're not going to guess on some wild scheme pointed out on a YouTube channel or somebody on a website telling you if you buy Binky Bonk, you're going to become a millionaire because you're already a multimillionaire. You've already got your money. You want to know where the market is going. And that's how the stock market works. It works on certainty. When people are confident, when there's no fear, they buy equity. They buy the stock market because there's nothing better than owning great businesses. It's better than crypto. It's better than bonds. It's better than sticking it in the bank. It's better than real estate. When the markets are going up and you own a great business, it's the best way to own money. However, that's when you know the markets are going up and things are fine. The reason why people buy in and sell out is because of certainty and lack of uncertainty. Real money, the ones that can move the market, are waiting for certainty. We want to hear from the Fed, and we'll hear very, very soon, Jackson Hole coming up and the FOMC report, and we've got the Nvidia earnings and all the other events. Every single day we have these events happen. We're looking for a turnaround in the stock market. We are looking for the bottom. I believe the bottom's in. We're looking for reassurance that the bottom's in. We're looking for confirmation that Nvidia is not an AI bubble and it's got plenty of growth in it. We're looking for that. We're looking to know where rates are going over the next year or two. Then all the money that's sat on the sidelines will come into the market. That's what the market is all about. It's not about wild predictions, guessing. It's about certainty. That's what we're looking for. And right now, I believe we've got a good economy. We've got the bottom in. And for me, that's why I'm all in and I'm holding and I'm just in fact, doing nothing now. I don't need to buy any more dips. I don't think we're going to go below my average price now. And I don't need to buy on the way up either. I'll just be paying off my margin over the time it takes to reduce it. But that's the difference between predictions and nonsense and BS. Predictions and analysis is pretty accurate, and you got a very good indication of where the markets are going. Everything else is just noise, and it's noise to get you to engage, to watch, to pay for something, to buy something or whatever, or provide some wild, outlandish entertainment, if you can call learning false information entertaining. I think that's just annoying and would be a pain in the backside if my mind was full of nonsense. Anyway, there you go. Click above my head for all the links down below in the description. There's my analysis on the difference between a prediction analysis and complete all-out BS. Over there and down there for more stuff. Until next time, stuff. I don't know what I'm going to put there yet. Take care of yourselves and each other.